All right, we are live according to this broadcast, and internet being what it is, there may be certain glitches. Hopefully, the volume and the audio comes across clear for everybody. But welcome to VA Live. We have some special guests and want to have a really good discussion about this loan product. It's called the VA Renovation Loan. And the VA handbook, if you go to the 26-7, this is actually a special underwriting product. It is totally legitimate. But like all things, just because you can, you have to have somebody who will, right? You have to have somebody who will do it. And we're happy to have two guests with us now. Laura Brandao, Chief Growth Officer with Equity Prime Mortgage, EPM. And if you see EPM, you'll also remember their tagline, empowering people more. And I think this product has a lot to do with that. And on my screen, I think it's the same for everybody. So I'm just going to go below me right here is Kevin Delory. Kevin, you're the, please tell me your title specifically, because I know you as my buddy who wears really good glasses.
Chief Lending Officer.
Chief Lending Officer. So you oversee loan products and all the loan things you all do, right?
Oh, yeah, hold the sales team for wholesale, correspondent, non-delegated correspondent.
Perfect. Laura, will you tell us a little bit about Equity Prime Mortgage and how you all fit with VA and how we kind of work together?
Yes, well, Equity Prime Mortgage has been around since 2007. And I think you said one of the most important things there, Nathan, empowering people more. That's what our stance is as EPM, whether it is directly to our veterans and borrowers, whether it's our client partners in the wholesale channel, or whether it's our internal teams. It's making sure that we are providing all the tools and support and empowerment of education that we can to everyone that comes in contact with EPM.
I love it. Well, to that end, you've been a big partner for VA since we launched off. We had questions. We talked to yourself. We talked to CEO Eddie Perez. We've been at different events with y'all. You've given us the stage to teach professionals and allow us to share our message as well, and I appreciate that. So today, now I'm going to introduce kind of our other VA professional that many people don't see her right away, but Nita has been working behind the scenes. She came and joined the team almost a year ago. She's our veteran training manager. Nita, I don't even want to mess up the litany on your resume. Like, you have so much amazing good things, and you've developed so much training. So I'm going to let you introduce yourself and then kick this off with some good questions. And I will say, if anybody's watching this, go ahead and hit #live. Let us know you're watching live. If you have questions, put them in here. I got this great little sequence right here where we can see the questions popping up, and we'll get to answering those shortly after we get through some of the stuff we've already prepared. So Nita, take it away.
Hey, so I'm Nita Wade. If you are a VA professional watching this right now, you know that I am the name and the writer behind a lot of the training that you have done. I'm an Air Force veteran, retired after 20 years, and mom of 3 here in Southern Georgia. And I love teaching people and sharing information. And so me and Vetted VA, we just kind of fit. So I build the training in the background. If you've got any feedback for any courses that you've gone through so far, please let us know. And I'm very excited to bring to you today some training briefs that we did on EPM's new VA loan product. I've learned a lot as a veteran. I can tell you I've bought 2 homes, and I don't think I've ever known what the VA lender handbook was. Don't ask me about a pamphlet 26-7. Don't ask me about different loan types. Absolutely no clue. But I'm going to tell you how important it is to learn about that stuff, because looking back, I'm positive I lost out on funds. I'm positive I did not get the best deal. I did not have the best relationships, and all of those things that you should need when making these huge decisions for yourself and your family. So tune in, pay attention. We've got a lot of great information for you, and we will go ahead and get started. Nathan's okay with that? All right. I read the training brief a couple of weeks ago. Was it a couple of months ago? Absolutely knowing nothing about a renovation loan. I know about refinancing. I know the VA program has an energy efficiency mortgage, but not really clear on how that works. So it was exciting for me to learn about it. So the EPM VA renovation loan is used in conjunction with the VA loan purchase or refinance, correct?
That is correct.
And then I read that you can get up to $100,000 in property renovation cost, which is huge, especially if you are, say, a veteran that bought a house that maybe you didn't really like that much, but you wanted to get in the market when the interest rates were lower a couple of years ago, and you want to do some kind of renovations. Well, there's a product here for you that you can use working through your broker in EPM. I did have a couple of questions just to make it clear, but do you want to just give us a gist of what this product is in veteran layman terms? It sounds like a lot of money. Sounds pretty easy to do, but that's, I'm sure you would know more.
Absolutely. Well, what's really interesting, and Nathan mentioned this when he was first describing about the renovation program, is that for even mortgage professionals, forget about just being a veteran and looking for that first home or looking to do that refinance. So many times people would never think of a VA loan product having a renovation loan to it, right? So many times people were steering into an FHA loan product or a Fannie Mae loan product, but that is not the case. The great news that we have here to share with you, just to your point, Nita, is that so many times when you're looking for that home, even if it is the perfect home, it may not be perfect for your family. Maybe there is an alteration that needs to be done. Maybe you just need brand new appliances. Maybe you walked in there and you needed all stainless steel appliances put in. We know how expensive that can be when you have to replace every single appliance, right? Maybe it's, 10-year-old carpet that needs to be ripped up. And then therefore, maybe it's a 1980s kitchen or bathroom that just needs to be modernized. Okay. So no matter what that home is, there's always something that needs to be upgraded or modified in order to fit the needs of your family. And the good news is that VA does have a loan program that allows you the ability to include those types of repairs and those types of modification. And to your point, up to $100,000. And we know a kitchen or a bathroom upgrade, it could be pricey. It is very possible that something like that, depending on what type of fixtures and what type of countertops and things like that you want to add in there, it is quite possible that it could be costly. But the good news is you can use your VA benefit. You don't have to go via FHA or via a conventional option. You can use your benefit, and depending on other factors, such as your credit score, you can ultimately go to 100% of that purchase price plus the cost, of course, depending on where you fall within your credit score.
Yeah, I would add something to that. I just ran into someone recently, and they're a veteran, and they're having an issue getting in and out of the shower. They have some disabilities, and I had mentioned to them, have you you should think about a VA reno. You could put the ramp into the front door so you're not struggling to get up the stairs. You can make the bathroom handicap accessible so you can get out a lot easier. So that's something that, they deserve that right to be able to, get around with ease. And this loan can help them do that. So to, Laura's earlier point, a lot of people get steered towards all these other products, but this is what it was meant for. The product was meant to make the veteran's life easier, to be able to live in a home that they deserve, that's good for them. So that's something just to add. I know, a lot of times people don't think of that, how it's difficult to get in and out of the shower. It's difficult to get up to the front stairs. And with the VA rental loan, you could make those adjustments to the home so they can live in it for years to come.
Wonderful. We talked about the 100,000 for the max. Is there a minimum amount that a veteran can say? Maybe they just want to get a bathroom changed out, or how low can we go as far as this product is concerned?
There is not a minimum to it. Now, there is one other caveat, since we are speaking about the levels in terms of the borrowing on the renovation. If you go above a $50,000 cost of repair, there will be an additional person that will be part of the transaction called a HUD consultant. What a HUD consultant does is this is an outside party that comes in that will work with the contractor and work with the veteran and family and the lender to be able to say, okay, I totally agree with exactly what these costs are. I agree with the timeline, and they kind of will supervise and work with the contractor and the veteran to make sure that the project is on course and everything is being done according to the scope of work. And that would only be required over 50,000 up to the 100,000.
Right, right. And there's time limits as well, right? Like they once they start, work has to begin within 30 days of the agreement, I believe, and then they've got a total of 6 months to get it all done, which I would think maybe that's not necessarily a problem, but sometimes there's like supply issues and all that kind of stuff. Are there exceptions to that, or just, make sure you have a really good plan in place with your contractor and have EPM review it and make sure it's good to go? What are your thoughts on that?
That is definitely something to take into consideration, especially like you mentioned, we are dealing with some supply chain issues.
Right.
Sometimes you're dealing with permit limitations, right? So that ties into one of the steps that we will do at EPM. One of the parts that we do as part of our process flow is we will do a call with the veteran and the contractor to have a discussion to make sure before the loan ever closes, we have a conversation and we say, okay, in such and such county, how long is it right now to obtain the permit, right? So it's like, okay, that's going to take us 60 days. Okay, if that's going to take us 60 days, will we have the material on site within that 60 days? So as soon as the permit is ready, they can start work and then complete it within that 4 months. So I would say that every single one is done on an individual basis. There is no one size fits all, because it's going to depend on what permits are required, where in the country this is located, of course, the materials, like you said, and that's going to be a lot of conversation between the veteran and the contractor. I can even speak for myself. I'm in the middle of a kitchen remodel, and the contractor said, well, we can go with these cabinets that probably are going to take about 8 months to get, or we can go with these cabinets that will be here in about 60 days. Those are the kind of conversations that the veteran will be having with the contractor in order to make those decisions so that we can stay within those timelines. Now, the good news is that EPM has a very dedicated renovation team that will be working closely on the project to make sure that if anyone does run into any issues during the way, they will be able to say, okay, we're able to make this change, or we're able to, go ahead and close this out and be able to get your draw processed, right? Because once that contractor has that project in place, we're going to be releasing draws to the contractor based upon how far along they are in the project. And of course, the veteran approving those before anything is released. So I would say that during this whole time, it's a very close-knit process where we're all going to be working together to make sure that the veteran is protected and gets the project of exactly what they expect to happen at the end.
Yeah, I think to Laura's point, a lot of people are afraid to do a rental loan because they've never done one before. It's a lot to take on. And I think having that VA rental team, we have a rental team that's dedicated to whether it's 203K or VA rental, to have that team to hold your hand and walk you through it, to speak to the HUD consultant, to do all those things, it takes away from that fear. And once you do one, it gets easier, just like anything. Your first VA loan was tough, your second one a little easier, and now you're a whiz with them, right? So I think it's that same thing. So we're there to hold your hand to make sure the process is a lot easier than trying to struggle alone.
And that's great, because veterans, we need that kind of structure. I've been learning with the training that I've gone through, the more information I can get, the better, but in small doses. Very bullet line type stuff is what we really appreciate. But it's good to know that there's a team there. And I wanted to talk about what kind of renovations you can actually get, because I was surprised to learn. To me, I'm thinking renovation. Okay, my house is over 20 years old and it's in fantastic condition. So I got very lucky. But I don't have a pool. And in Southern Georgia, almost every house has a pool. but I cannot get a brand new pool. If I had one already, I read that I could get it upgraded or get it repaired if I needed to. But this kind of loan isn't so you can turn your place into like, you know, Pimp My Crib with the tennis court and the swimming pool and all that. So what kind of renovations can a veteran get?
Kevin, you want to take that one, or?
You go ahead. I mean, we kind of already touched on it, right? You would talk about the new kitchen to make it handicap accessible if they have an injury. So, you know, there's really not, I believe you could even, you know, if there's a problem with the septic, I mean, you could go from there, Laura, but I mean, there's not much it doesn't cover. You made a great point, Nita. It's not designed to, you know, take your house to the next level so you can compete with the Joneses. But it's there to make it better, to make it more livable, to, you know, to upgrade things that the veteran deserves to have, you know, after serving this country. And so, you know, I think you could, if you want to give a rundown of it, but.
Yeah, the one thing you do want, you hit it, Nita and Kevin, exactly what you said about we're not doing pools, we're not doing cabanas, we're not doing, you know, that type of thing, major landscaping. Like I'm trying to think of some of those other shows with the pools and the crazy landscaping stuff. But one thing to keep in mind, this is not intended for structural work. Okay, so you're not adding a level, you're not adding additional living space, so nothing structural. Okay, but to Kevin's point, you can certainly upgrade that kitchen. Like I said, the 1980s kitchen or bathroom, the pink, you know, in the bathroom, the shag carpet, you know, you can do all of that. Roofing, you know what I mean? Maybe the roof is shot and maybe there was a leak in something that you saw. Even with that, if there was a leak, you can do mold remediation. So maybe you see a property that you get a really good deal on and it does have some mold. Now, of course, we would want there to be a mold specialist. We certainly don't want anyone doing work like that if they are not an expert, because that is a specialty. And that leads me to something I want to add to that. With that, we would look for one general contractor. Now, what that means is that doesn't mean that that person has to do all the work. Let's use the mold remediation as an example. They would oversee that and they would say, okay, this particular project, we're doing a new kitchen, we're doing brand new flooring, all hardwood, you know, we're upgrading some things, we're fixing the leak in the roof, and we also need a mold remediator. Now, that person can hire any kind of subcontractors that he feels is necessary to be the best at those particular situations. But he will be the person to manage it, and he will be the person that we would work with in our renovation team to make sure the project is on course and that we are releasing that draw money as the project is progressing to completion.
So I think I would jump in too and say there's a very strict component here as well, that because we are speaking to veterans and consumers who are thinking like, well, gosh, I'm a contractor, like I'm just going to take this money myself and be that. It's the same caveat that comes into the construction loans with VA. You cannot serve as your own general contractor, and sometimes we get the why, like, well, that doesn't make sense. I can save money by doing it this way, therefore I save money here. I extend here. It's actually a checks and balance issue. It is having that utilization with an affirmed VA contractor, an approved VA builder, right? You have to have that. You need the checks and balance. Like we can't, by not having that third party, we run into possible money issues. And so it's really important. And that goes here too. You can't serve as your own contractor. You have to have that actual approved and secondary third party contractor to be your general.
Yes, that is a very good point. There definitely has to be an arm's length when you're dealing with that. So even if it's not your own, if we see some type of relation or something like that, when we're going through the vetting process of the contractor, we are going to ensure that there is arm's length between all parties.
That's good, because God forbid something bad happens and we have to go and try to recoup money. You need the licenses and the bonds and the second, arm's length from everybody. We didn't touch on this early, but I want to say this renovation loan actually does, it applies to condos, condominiums. Yeah. It applies to manufactured housing. Okay. That as long as it's VA lendable, it applies to that, and 1 to 4 unit properties as well. And I mean, that's where, when you guys rolled this out, I went, Oh goodness, this is huge, right? Y'all just didn't say like single family stick built. You're like, no, we understand people live everywhere. One question we got, and I'd like to kick this out to you from the audience. Somebody asked, are there any states that are excluded?
No.
You cover all 50 states?
The only place that we do not do this is in Puerto Rico, because we do lend in Puerto Rico, but we do not offer VA renovation there.
Perfect. Okay. Very cool. Sorry, Nita, I kind of hijacked right there, but what other questions you got? I'm going to jump in there.
You actually talked on one of the topics that I was going to mention as well too, is the types of properties. So this whole loan process is similar to the other ones. So you have an appraisal process, you have a full closing. What are some unique things that veteran buyers and brokers need to be aware of as far as the appraisals are concerned with the property, as far as closing is concerned with this type of loan?
Okay, so on the appraisal piece of it, when you're working with your mortgage broker that you are doing business with, you are going to make sure that you do have that contractor bid before the appraisal is placed. Because during that process, when that order goes into the VA for them to do the appraisal, if they don't have that contractor bid, they're going to appraise the home as it is today. But once they have that contractor bid submitted to them, they're going to be reviewing it with an after improved value. So they will be saying, oh, well, this isn't a 1980s kitchen. This is a 2023, 2022 kitchen, and it's state of the art. So we're going to give some added benefit and value to the home having a brand new kitchen. So it's very important that we have that contractor bid that is submitted, and your mortgage broker, when they order that appraisal, that way there isn't this, delay if we have to come back and say, oh no, this home actually is going to have all of these features: brand new stainless steel appliances, a brand new kitchen, hardwood floors, and of course, the roof is fixed and the mold is remediated and everything is good there. So that way, when the appraisal comes back, it has an after improved value, and that is what our loan amount is based off of. So let's say you're purchasing the home for $300,000, okay? The thing is that if it's now worth $400,000, that will allow us to lend up to $400,000, again, all depending on where your credit score is, of course, in terms of that. But that will allow us to go off of the $400,000 value instead of what you paid for the home at the $300,000. So that's a big difference. Now, what will happen at closing is we will actually hold back. When we do that closing at that table, we will put the funds in escrow, which will be all of the renovation costs plus a contingency that we build into the loan amount, as well as inspection fees and title update fees. Now, what happens with the contingency is sometimes your contractor, I'll just use an example. Let's go back to the mold. So he opens up the wall and he thought that the mold only went through, one wall of sheetrock. That was what he thought when he did his bid. But then he opened it up and he said, uh-oh, this mold actually wasn't just on this one wall. It actually spread and it's into this other section. Okay, no problem. That's okay. He's going to then update. All right, now it's going to cost a little bit extra to get rid of this, some extra time and labor and cost and that. And that's where your contingency would come in. So that we would say, again, working with the renovation team, that would go to them. Your contractor would communicate this and provide pictures and show what's happening. And then the renovation team would say, okay, not a problem. We're able to utilize this part of the contingency to apply it so that way we can get that taken care of. Now, let's say he opens up the wall. Everything is perfect, exactly what he expected. No need for any contingency. Afterwards, when the project is done and a final inspection is completed, that contingency that we have left over will be applied to your principal balance of your loan. So if it was originally a $400,000 loan, let's say we had $15,000 in contingency, that would bring down your principal balance.
That's good to know too. I wasn't thinking of it like that. I had another question, and it wasn't necessarily about appraisals, but when I looked at the training, it seems to me it's best to have your documents as detailed as possible with your contractor stuff. I would assume that would make the process easier for getting approved, for having the contractors vetted, easier to work with the veneration team because they have their questions answered. So I would just let veterans be mindful of that. You know, do your research on who you're selecting, make sure they're reputable and stuff, because in the training you can see there are very different vast forms, what's acceptable to EPM and what's not. And I think it's good to be mindful of that, because one, we're all about training and education. Two, it's going to make the process a lot easier, I think, to go through all the wickets in the process flow as far as getting approval. Now, Laura, you mentioned something a lot, and I was going to say this in the beginning, credit scores. Now, everybody wants to know this. They want to know how they can qualify, who they need to work with, you know, what they need to do or where they need to be at. And on one of the training slides, I do remember I saw like 580, 620 this with percentages attached. Can you go over that with us?
Yes. So you are correct. 580 would be the minimum credit score. So on a 580 credit score, that would allow a veteran to use it on a 1 to 2 unit up to a 90% LTV. So 90% of whatever that after improved appraised value is. Then at 600 on a 1 to 2 unit, you would be able to go to 100%. So if it's worth $400,000 after improve, we can go to a $400,000 loan amount. Now at 680, it opens it up that now we could do a 1 unit. Now remember, you can also do manufactured housing and condo to Nathan's point. Okay, so 1 to 2 unit and a 3 to 4 unit at 680 FICO. So now you can do all of it. Manufactured home, condo, 1 to 4 unit, and that's going to take you up to the 100%. At 700 FICO, you get all of the above. So your condo, manufactured, 1 to 400 LTV, and you can now go to $1 million on your loan amount. So now you can go higher on your loan amount to that. Okay, so that's going to be your difference based on the credit score.
I want to interrupt because we got some good questions coming in. I want to catch these while people are asking them. So I'm going to scoot back just real quick. We've had a couple of questions on refis. So Kevin, the question here, I'll show it on the screen. It makes it easier. Is this a full refi, or can it be in second position when the first is a very low rate?
It is a full refi.
All right. So it's a full recapture refi.
Yep.
Now, let me ask you this question then, Kevin. Can I cash out any of it, and can I get cash out and do the renovation at the same time? Like, can I pay off some other debts?
No on that. Okay. You know, so here's what's cool about this. You know, just to back up, some of you guys was taking notes down, and it sounds so overwhelming, right? You know, this is my first foray into VA Reno, but having this Reno team is big. We talk about, need to mention the different forms, the credit scores. These people are going to get involved in this the minute the loan's submitted and say, well, you're missing this. Let me call the HUD consultant for you to help you get this. So when you're dealing with a broker that's partnering with EPM, these are one of the added advantages. And anyone that knows, you know, Eddie Perez knows that he's first generation American, and there's no overlays on our regular, you know, VA loans. For just doing a video today, and he wanted to make this as easy as possible for every veteran to be able to do this. And we all know, we took back to appraisals, VA appraisers are the toughest, right? They are the toughest to make sure that that property health and safety is first and foremost for every veteran. So not only do you have the HUD consultant looking out for you, you have a contractor and that appraiser looking out for you at the end. So sounds like a scary process. I'm listening to this and I've taken 3 pages of notes. But when you have all of this community that comes together to support the veteran, it's not as difficult as it sounds. And like we said earlier, once you do one, the second will be easier, the third one will be easier. So
it can be a refi. It doesn't have to be done on a purchase. It can be a refi loan, but it is one and done. It's an all-inclusive first lien position for any of the pros listening. First lien only, no second lien position. It will recapture the entire loan you currently have. Can I use it if I'm going from maybe I got talked to an FHA or a conventional previously, and now I'm VA eligible as a borrower. Can I move from conventional to now a VA rehab loan?
Yeah, It's just no different than doing a purchase using your, there's
Good.
really, there's no difference, right? It's just no different than doing a new purchase. If you want to refinance and do that VA rental, you're more than welcome to.
Somebody posted on here. We given the opportunity to ask questions. Absolutely, just type them away for me. Throw these questions in the bar here. Somebody asked about the multi-unit. So their question, looking at this, was: are the units qualified to be renovated, or just the main unit? So just to clarify for anybody, right? So if you're a VA eligible purchaser or borrower, you can get an up to a fourplex. As long as you maintain one of those units as your primary living space. Mm-hmm. So the question, because we clarified and you all said, like, look, if you got a credit score for it, 1 to 4 unit, can I reno all the units? Do I just my own?
You can. Just one caveat that I'd like to, throw out there. The property cannot be unoccupied. And I'm not even speaking about the other units, right? It's very possible that you purchased the home and maybe there weren't people in there, or you don't have leases for the people going in there and you didn't qualify for that. But for you, the property cannot be unoccupied for more than 15 days. So keep that in mind when you're doing what type of project. And again, remember, we're not doing structural. We're not ripping down half the house. We're not ripping off the roof and adding on to it. So just something to keep in mind. But to answer the question, yes, the other units can certainly be rehabbed because, again, maybe they need to freshen them up so that they can have a higher rental income coming in to help that veteran family.
Yep. Okay, good. I think that makes a lot of sense. Nita, go for it.
I was just looking for another question, but that's a really good one. We know that the house hacking thing, and I love seeing it, especially with our younger veterans that are using their VA benefits as they move from base to base and they PCS to buy these properties that they can rent out later. So having that 4 units, say you want to update all the kitchens and stuff, that's really, really good to know. Let's see what other questions I have. We got the time period.
While you're looking, I'll say one other thing. It's just having this conversation with a younger gentleman in the office. He wants to buy a house, but he can't afford what he could afford a year ago, and he wanted to buy this, $700,000 house. And now they're looking at $500,000. Here's an opportunity to get into the $400,000. You're putting that equity into the property, and you're able to. So you may not be able to afford that $700,000 house, but you get in at a $500,000 house, and after improvements, maybe it's worth $700,000. So it's an opportunity to get at that lower level, but end up at the higher level that you originally wanted.
Yep. I love that.
One of the common FAQs, and I think our audience should know this as well, is can you use a VA renovation loan to purchase a HUD property? This is on the FAQs from the EPM brief, but I think it's good to share that info with others.
You absolutely can. The only thing you do want to keep in mind, and again, I know we're mainly speaking to veterans and not mortgage professionals, so this might be a little out there, but it wouldn't apply on a HUD-owned like $100 down program, because that specific program is for HUD-owned and then going into an FHA loan. So if it's just owned by HUD, or it's owned by any other servicer or any mortgage company that maybe went through a foreclosure process, absolutely, you can use a VA renovation loan for any of those.
So this is where a lot of value comes in this, where you find foreclosure, you find a short sale, they've got no margin, the seller's kind of out of it, even in an estate sale sometimes, right? They're just the estate selling it, and you walk in, you're like, gosh, I grew up with that 1970s wallpaper, and I really don't want to look at that again in my home, right? And or the gold shag that I grew up with that was finally ripped out when I was a teenager, right? Like those are the things okay, I can make this my home. I can overcome some of these deficits. And this is a really simple way to do it, because you're looking for, remember, the VA loan is phenomenal. And the reason the EPM can be so big and bold on this is because it's being backed by the VA guarantee, right? So the home eligibility guarantee basically says to the lender, to the note holder, when it's securitized, look, we got you covered for up to 25%, right? There's a good coverage here in case that veteran defaults on it. And I will tell you this too, numerically, veterans don't default on their loans like every other loan product out there. It's secure, it's safe, it's worth it. So when you're looking at this opportunity, it allows the buyer to go, okay, I've got great buying potential, and I can make a choice that will help me get a fantastic offer on maybe a house that's a diamond in the rough. I think back to Aladdin with the lion in the cave, like it's a diamond in the rough, right? Like this is something you need to put your brain on it. I find the most concern here, though, the conversation is the whole contractor dialogue. So I want to go back a little bit to the contractor dialogue, because in the presentation, in the training, really there's a lot to it. How the bid is made, right? How do I get the contractor to give me the bid and the timeline? And how do I go into offer on a house, get that accepted, get a contractor, get the offers, get all the paperwork done in the right amount of time to still close on time? Like, let's walk through that series a little bit. And I think leaning into Kevin, your point, you got a whole team with EPM that's going to get it done. But tell me, I'm not a veteran, but tell Nita, she is, like, how she's going to get this done from start to finish with your team.
Yeah, I mean, listen, the minute that we'll even help you with the HUD consultant. The one thing about the team is they're not afraid to pick up the phone. They'll find you a VA contractor, and they'll say, look, and anyone that's doing these loans, let's be honest, it's funny. You should always get a bid. I just did something to my house and I didn't get a bid. The guy told me how much it was and then came back with a bill twice as much. I'm like, what am I thinking? I should know better. I'm in the business. I should get a bid.
Right.
I think that team is going to go through that and tell you, like, this is acceptable. This is not acceptable. They're going to help you work through it. They're going to pick up the phone and get on the phone with that contractor and be like, hey, just looking at what the property, so if, let's say it was a HUD property, you're going to come with a property inspection already. Hey, looking at this, you didn't address, the electrical work. You need to do that in order to put it in this bid. So they're going to hold your hand through that whole process. They're going to pick up the phone and get on the phone with the HUD consultant. So that would be my fear, right? I'm no contractor. I just did my bathroom over, and my wife handled everything because that's where she's stronger. She's at negotiating and keeping records and making sure they're done in the timeline they are. And that's what this team offers you. It's basically almost like a contract processor, but we're not crossing that line. We're just dealing with the construction documents, the HUD consultant,
Nice.
the contractor. Pick up the phone, make sure they have the right insurance. Letting you know, hey, I don't know if you want to use this guy. He's not insured properly, or hey, he's more than the coverage is more than enough. So those are all things that we do that no one else is going to do for you. It's pretty much, and that's why it's such an intimidating product. And when I looked at this deck, it's the first time I looked at VA Reno, and I'm like, wow, this is a lot. Again, I'm taking notes, but to have someone to hold your hand through it and say, I got you, is big. And that's something that we do that not a lot of others do. They're going to tell you it's wrong and keep pushing it back and forth. And the contractor is going to say, I'm not quite sure what EPM is looking for. Can they be more clear? And an underwriter is going to be an underwriter. They're going to send an email back to the broker. The broker is going to try to dissect it, whereas our VA rental team is going to pick up the phone and talk to the contractor for you, and then educate you and let you know, by the way. Not going to leave you out of the process. You're going to be involved in the process. So you understand next time, maybe I don't need them for everything. I understand that this part of it now. So I think that's the biggest difference between doing a VA reno with EPM and others.
That's perfect. Laura, you have anything to add with that?
And I will tell you, we keep track of every contractor. Every contractor that ever does a transaction with us, we keep a record of them. And we know, we kind of have a scorecard, right? And we know who are the contractors that maybe fell short, that said they were going to do something, or maybe the quality of the work wasn't up to, where we needed it to be. And so we have that database that as we're working with veterans and with our client partners, we're able to say, you know what, Bob the Builder in this place, unfortunately, he just didn't come through in the past. Now, we will never say you can't use someone as long as they're properly licensed and insured and all of that stuff. But we will go back and have that conversation with the contractor and with the borrower and veteran so that they can make that educated decision to make sure that we are protecting them, because that's what we're here to do, right? We're here to make sure that there's quality work done and everyone's happy in the process. But to Kevin's point, yes, having that experienced renovation team that is able to hold hands. I mean, let's take that bid that Nita mentioned, right? Why is that so important? It's so important because anyone can say, we're going to redo the kitchen. Okay, we're going to redo the kitchen. Well, That could be anything from a $5,000 job to a $100,000 job, depending on the material that you're using. Whether those countertops are, made of one material versus another, it could be a huge variation. And that's the reason why we are going to work with them to say, okay, Mr. Contractor, we know that, maybe other people are okay with you just saying new countertops. Unfortunately, no, that's not okay for our veterans, because we need you to be specific. What material are you using on the countertops? What is the width and the length of that? And then that way we know, okay, the price that they're charging, well, that makes sense. That's in line for that material with that length and width. Otherwise, we cannot ensure that maybe they're not being overcharged. We don't know. And then there's another problem. So many times people say, well, maybe they're undercharging. That's actually a problem. And I'll explain to you why. And this goes back to that arm's length transaction again. Okay. The reason why you never want somebody to undercharge or have a bid that isn't in line is, what if that company goes bankrupt? What if all of a sudden what if they run away, right? And they disappear? How are we going to finish that project? How are we going to ensure that that veteran has enough funds in that escrow account to be able to complete the project that they were looking to have completed? So overcharging is, okay, of course, we always think, oh, we want to protect against that, which we do. But undercharging could actually be a worse problem. Because if we do not have enough funds to where if something happens and we can't bring another person in to complete that, that is where the expertise of that renovation team is so important.
Laura, you said something there, I wrote it down a little while ago, and it's the number one priority, right? And that is protecting the veteran. And to your point, the undercharging or the overcharging, both of them are protecting the veteran. And you said the word probably 3 times, or you just described it. I had written it down earlier. That is what we're here, and that's our number one priority at EPM, is protecting that veteran.
Here I was muted. That's definitely one of the big things about reading through the 26-7. I'm glad you brought it up, Kevin, because the VA Lender Handbook is all about protecting the veteran's interest and protecting the VA's interest in that property, right? So that's why when we talk about appraisers, we're like, hey, appraisals can be so nitpicky. They won't let certain things slide, handrails and bushes touching siding, right? Things you're like, well, it's super easy to fix. Well, yes, it's super easy to fix, but if it's not fixed, it's hiding something. You need to make sure it's clean and robust, safety standards. Somebody wrote in here, can I renovate my home? It has a lot of water damage from flooding. So what does my credit score have to be, and how much can I get for a complete makeover? That's a really interesting question. So the first thing we have to do is say, okay, if you have a home and you've had flooding, you need to turn your insurance, right? Insurance, your HOI, your homeowner's insurance really needs to cover down on those things. Now, if it's brought back up through insurance to livability, but then you're like, but I don't like it. I was already planning on renovating. Can I do that? Right? There's a livability standard. Once that standard's like, yeah, we can loan on this. Now let's do the fix. Walk me through the scenario where you think this works or it doesn't work, and I'll leave it up to both of you to battle that out.
I was thinking exactly the same thing what you just said, Nathan. If you have a flooding issue, that would be insurance first, right? You always want to contact your homeowner insurance. You want to, have them come out and take a look at that and have a claim and allow that to be at that livable standard. So to answer your question, first, you are 100% on the right track. The other thing I need everyone to understand, and this again is, you have to put this into perspective. When it comes to how much you can borrow, okay, and let's just take a purchase. Let's take a purchase. Let's start there, because more than likely a purchase, you're not walking into equity. On a refinance, you probably already have equity, depending on when you purchase the home. Okay, so let's take a purchase. On a purchase, remember we're using an after improved value. So if you have something that might not add after improved value, you may not be able to borrow that amount. So just think about that concept, right? So if it's something that dollar for dollar is not going to raise the value of the home, that could be difficult in utilizing the program in that after improved value. So just something to think about. Now, the
That's
same
super interesting.
concept.
So I'm
Yeah.
saying like let's just even lay it out, right? Doorknobs. I don't like
Right.
gold doorknobs. I want silver doorknobs. Probably not going to float,
Correct.
right? As a standalone, because frankly, it's a doorknob's a doorknob. I'm sorry you don't like it. I don't like my faucet silver. I want it brass. Maybe if it's included in an entire kitchen remodel, where now we have updated and not old oak stained, like I was just thinking about like Elmer's, or what's that old oil that they used to clean the wood with, right? Murphy's oil, right? Murphy's oil, like those Murphy's oil cabinets we grew up with. But it's like, no, I want a white kitchen and I want it upgraded. Okay, now I can include the faucet, but I'm not just going to do a faucet, right?
That's
Those are things that, and I just want us to thinking through that. Like when we say improved value or an update that improves value overall, it's not just some of the niceties, it's the necessities.
That's correct. That's right. Now, to your point, if you're combining it with something else, more than likely you'll be able to get that value. So the reason why I bring that up is the situation with the flooding. Now, that sounds like a refi because he owns the home already in that situation. And again, it all depends on if there's equity there, right? And what is he looking to do? Is it just mold remediation and something like that? Or is it completely redoing the family room, because that was where the flooding was, right? So there's a lot of questions there, and that goes back to, and I keep replaying what Kevin was saying about, it is a little overwhelming and it's true, as we're speaking about this, I'm thinking about that, right? And so I think this is where working with the right mortgage broker partner that is educated on this, and then of course them working with our renovation team at EPM to be able to have that guidance and really handhold, because we certainly in 60 minutes on here, we're not going to be able to go through all those situations, but the most important thing we want you to take away is that this program is here for you. This is a wonderful program to be aware of, and a wonderful program to raise your hand, ask those questions, and be educated on the fact that this was designed for you and that it's available. That's the biggest takeaway.
I don't want to speak over too much. Nita, you got another question? Or
I was just looking at the questions that they were asking. Do you want me to go ahead and ask one of them? Because this is an interesting one. So a Facebook user had asked, is it possible to do one project at a time? Maybe they mean like I'm doing a deck and then maybe next year I want to do something else. And I would think each time you'd be refinancing, so it probably would not work out that way. I would take advantage of getting all your projects in line together and then applying. That way you can get it all knocked out, would probably be the better move, just so you're not, going through that dip over and over again. Plus it makes sense, and the program does not work that way. So if you have a deck, maybe look at some other areas of your house that also need renovations done, get a list together and, start putting in the work as far as finding contractors. I did want to know, because my brain was going, the process seems very overwhelming, but it is very step by step. Make sure you have, checklist for my contractor, checklist for the house. Say if I'm a veteran and I've got my home, I've got it all down. I've got my contractor. I know exactly what I want. I'm working really well with my broker. We're all on the same page. And my broker comes to EPM and is like, here you go. We've crossed the T's, dotted I's, we're good to go. What's the turnaround time? Like how is the renovation team like, we got it together, approved, like what's the turnaround time for us?
Go ahead, Kev.
Listen, we close loans in less than 20 days. So it's to your point, right? If you package it all together and it's all done right, I'd love to see every file that comes in from a broker look like that, because we would do 10 times as much volume. So it's what you give is what you get. The cleaner it is, the cleaner the approval is, and the average approval, let's say in this case, no one's ever going to get a perfect score of 100, and they come out with 2 conditions and they submit those 2 conditions within a day. It's 48 hours, then it's 48 hours schedule of closing. We've had cases where if it comes in full and it's all underwritten and all of that stuff, where we get it done before we can actually legally close the loan. So, this is a lengthier process, if we're all being honest, because no one ever get that person you're talking about, probably 1 in a million. I've probably got a chance to win that $2 billion on Powerball. But but when you do get, well, I wish it, but realistically, it's probably going to be a 30-day process in that time frame. We got our average turn times, for cycle times, almost breaking 20 days. So just think about that for a minute. I mean, still, a lot of people can't even do that with a conventional loan. And I will tell you, it's such a different market. It's so funny that last year you couldn't get an offer accepted with an FHA and VA loan. In 2023, government loans are going to rule again. So the purchasing power is back. Don't be afraid, like I said earlier, to go look at that $350,000 house, because you're going to get better bang for your buck doing a VA reno on that than you are buying someone else that, slapped up some $500 cabinets. It looks pretty, and a year into it, the cabinet's falling off. You got a leak in the faucet. You're better off doing it your own way. And in 2023, you're going to have that purchasing power again with the government loan.
So I want to recap a couple things as we get to the bottom of our hour. I'm so appreciative, Laura, Kevin. Thank you for making time to do this, to talk to the VA community about what this product is and what you guys have rolled out. I'm going to brag on EPM for a second. So another question came in, is like, what does your credit score need to be? So for this product, there's as low as 580, and there are caveats on what the loan to value is, and we've gone over that. But so watch the replay if you just came in. As low as 580. But I will also say this, from VA's perspective, the loans we track the operations of our VA professionals to make sure they're serving the veteran community as best as they can. EPM, you all are there. I've seen you close loans 520. Like you guys will close loans for veterans, for VA eligible home buyers, where frankly, if it makes sense and we can make it work, you'll get it done. And I appreciate you. I've seen you all come across in some pretty tight scenarios because it made sense, and because your EPM stands for Equity Prime Mortgage, but your call sign really is empowering people more. You do that, and you will make it make sense when it's there. So I really appreciate that. There was another question that came up that was some people watching may be thinking investments, because the VA loan is a great place to get into real estate investment. You need to occupy the property. For a VA renovation loan, it is your personal property. It can be one that in the future, it's still a VA loan. In the future, and you move on, you get orders, and you move, it's still a VA loan. But at the time of origination, when you're applying for the loan, it's your property, which is why in a multi-unit, 1 to 4 unit, you have to occupy one of those and can't be gone for more than 15 days. So key takeaways there. Again, Laura, Kevin, any last words, any last thoughts you'd like to share?
I'd just like to say an early happy Veterans Day. And, I just literally just delivered this message to our marketing team that, people ask us all the time, why don't you have overlays? Because you've served, you protected this country, and there was a product designed specifically for you. So we'd be doing a disservice if we were to put overlays and make it more difficult. So we do underwrite to the guides. There's no overlays because it's the right thing to do. And again, I'll just repeat, Eddie's, first generation, American, USA, go all the way. He'll tell you a rowboat story. He's got some good stuff, but he said, if I'm going to do this, I'm going to do it right. And I'm going to do it the way that they want me to do it, because they deserve it. And that's why we do it that way.
Yeah, that's great.
Yes. But piggybacking off of, happy early Veterans Day and happy 247th birthday to the Marines today. That's incredible. So
somebody had to say it. Good job, Laura.
Yeah. In Philadelphia, in a tavern in Philadelphia. So just wanted to thank you guys for everything that you're doing, for the opportunity for Kevin and I to be here, for EPM to continue to serve the marketplace and provide everything that we can to help the veterans. This product, yes, it certainly seems a little overwhelming when we start to go through it. Just remember that we're experts in this. We are here to do our serving to all of you. So thank you for everything, and we look forward to continuing to partner.
Cool. Nita, any last thoughts?
Yes, veterans watching just like me, take advantage of this program. Take advantage of your VA loan benefits. You worked hard, you served, you have earned them. A question was asked, where do you apply? Please work with your broker. have them contact EPM and get the additional details for it. We do have slides available. We do have this training on our site. I'm sure Nathan's going to talk about it. But for the veterans out there, if you've never even thought about your VA loan, reach out and ask. There's a lot of us veterans that have used the VA loan, and we're learning more about it every day. The program is continuing to grow, and we have great support from partners like EPM and your whole VA network that you can reach out to and ask questions. So don't let this benefit go to waste. Use it for yourself, use it for your family, and happy Veterans Day, early Veterans Day.
I appreciate that. Yes, if you're interested in this, go to vetava.com, click on the state you're in, and talk to any of our VA professionals there. They're going to be connected up with EPM and able to do this. They've got access to this training ahead of time. And to Nita's point, EPM has allowed, we're going to push this training out publicly next week, this training on the course, on the product. Really, it's EPM has said, here's what the product is. And they do not hide. They're like, nope, this is what we do. This is what we'll back. And Nita's put together a great course on it. So professionals, you're definitely going to want to listen to this course. And veterans, if you're even interested, it's a lot of this. It's just more detailed the way that we lay it out. So how it happens and where it goes. And you can prepare yourself to be to take full advantage of your benefit. It's an contractually earned benefit. So thank you all very much. Thank you for making the time. And if you're catching up on this later on, we'll listen. Well, I mean, honestly, I'd be excited to have you guys back soon. So let's think about the next thing we got to talk about. Okay.
It would be our honor.
All right.
Thank you.
Thanks, guys. Have a great Veterans Day tomorrow and a great weekend. And we'll talk to you all soon. Take care.